Morning, ladies and gentlemen. This is Greg Michalowski from FXCD. This is the Monday, March 15, 2010 New York opening Forex report. Monday we got off to a rousing start. We're kind of reversing some of the moves that we saw on Friday as a result of the U.S. retail sales report, stronger than retail sales report. There's concern about the Greek situation coming out of the euro, and in the UK, which is getting hit particularly hard, the British pound. There's reports that perhaps or that their debt rating may be reduced. As their budget deficit increases toward a percentage of GDP that's equivalent to what the Greeks are currently facing, and that may cause some issues as far as their debt rating down the road. Moody's affirmed their rating this morning, but warned that it is moving, on a scale toward that end of having it reduced. Nevertheless, it remains a AAA rating, but the pound is getting pressured here this morning. So why don't we go and take a look at some of our current markets. We'll start off with the euro versus the US dollar on a daily basis. So we did see the market move up over the last few days of last week when I was off, and moved to a high that reached 137.96. That's in between this high that occurred at 137.88 and this high that occurred at 138.01. So we are seeing the market. The market found the top against that level, at least on Friday, and it started to come down here on a daily basis. Longer term, we're still targeting up at this area right here, 51 to 80, 38.2% retracement of the move down from the high that occurred in for 2010 in January at 140, 579, and the low occurred at 134. 37, but it looks like we're back down on a slippery slope to the downside. I'll take a look at the hourly chart for the euro versus US dollar, and we moved our Fibonacci up from the lows that we saw here in early March to the new high that we saw last week at 140.3796. 38.2% retrace, and comes in here at the 136.59 level. That's also where the 100-hour moving average is currently located. Now, if we go back and look at the support level right here, this is the old high, and we are finding support against that 137.04 level here against this high. There is other additional support at 136.91. If we go back in time, and if we look at the 136.91, that was this high right here, going back to February 23rd, and that proved to be a sticky point right here. We got through that level and then used it as support right here, used it as resistance right here, used it as resistance right here, had that one little move to the upside, used it as resistance right here, used it as resistance right here, and then finally used it as a springboard to the top side last Friday. And so that's going to be other key support to the downside. If we break through that level, then we're heading down toward this 38.2% retracement toward this 100-hour moving average on the downside. Take a look at the 5-minute chart. We are below the 100-bar moving average. Currently comes in at 137.35. Let's go back to the chart. 137.35. That's high going back from March 3rd. So the 5-minute chart, we got the 100-bar moving average comes in just around that level. So that's going to be resistance on the upside in early New York trading. Look for resistance in that area here between 29 and 35 this morning. If we're able to stay below that level, we could see the market start to rotate back to the downside. I mentioned that the sterling versus US dollar was under pressure. And if you look at this daily chart here, the rebound off of the lows here didn't really quite get the push that the euro did. In fact, we're staying more toward the bottom here of the range here in the pound sterling. We're seeing the market move back to the downside here. You can see it clearly here off of the hourly chart. The market's out down below, testing the 100-bar moving average. Currently at 150.33. It did go below it. The current price is 150.34. So we're just at the 100-bar moving average as New York enters the market. If the market is able to stay below this 200-bar moving average, which did on this last hourly bar, we should see the pressure continue. You can see how the market went up, test that 150.54 level, and held that level. So that's going to be our resistance here this morning. As long as the price can, if the price can remain below the 100-hour moving average, it's even more bearish for the bears. if we're able to push above and correct up to 54 and stay below that level, we should see further moves to the downside as well. Taking a look at the 5-minute chart, the market was in a very quiet range here. We tried to spike up to the top, and then we had the comments, and the market moved back below these converging 100 and 200 bar moving average. When the 100 and 200 bar moving average and the price converge, that often leads to a move. And in this case, we did see the move right to the downside. Boom, 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 all the way through. We are looking at the Fibonacci off this 5-minute chart. This comes off of the low going back to March 10th, and then move to the upside. The corrective move to the upside, and we're breaking below that 50% level, 150.44. Again, though, however, I'm going to be watching this 100 bar moving average, in particular this 200 bar moving average, 150.54 is on the top side. Let's go to the dollar versus yen. We are seeing this 100-day moving average held on Thursday. It held on Friday. Today we're moving up to the top side here. Actually, a very quiet day here, although up on the day. We're up from Friday's close. Friday's close came in at the 90.45 level, so let's put a line at 90.45 in that currency pair. That's going to be a support level for us today. If the market is able to break through that level, we should see further moves to the downside. The 100 bar moving average is 90.39, so right in that area we should find support here. The range is very narrow here for the dollar versus yen, suggesting that perhaps we're going to see a move. And our high was reached in the first hour. That's at 90.83. So I put some trend lines in here against the tops and using the bottoms as well. And see, oops, that's not going to work right here. Doop, boop. And look for the break to the downside or to the upside for the dollar versus yen here in the trading. You can see that the non-trending action at today's range has 100 and 200 bar moving average moving sideways for that currency pair. There's interest in the dollar Swiss. It continues to get pressured. We are back below the 106.99 level. Friday's high came in at 106.95 and started moving away from that level. That's 38.2% retracement of the 2009 high to low range. So we're back below that level, and that seems to be pressuring the dollar versus Swiss. What is important though is look at this Euro Swiss. It's getting hit pretty hard here. This is after last week's Swiss National Bank meeting, which said that they wouldn't tolerate excessive movements in the Swiss franc, especially versus the euro versus US dollar. We are seeing that market break to the downside, kind of testing the central bank. So we may see some sort of intervention if this market continues to go in this free fall fashion here in the euro Swiss. So I'd be careful about this currency pair, and in fact, it may cause some sort of bottom here in the euro as a result. If they buy some bar in euro Swiss, it may have effect of increasing the either dollar Swiss or the euro versus the US dollar. So we'll be seeing watching that closely, but kind of puts a little spin on the market, a little cause for concern in the Swiss and perhaps in the euro as well. Finally, taking a look at the dollar versus Canada, we broke through our 1, 2, 3 lows there at the 102.07 level on Friday. Today we were staying below those levels. That will be a key resistance on the top side. The high today was 101.93. The current price is 101.89. If we're able to get above 102.07, we have this high at 102.23. We had this high low at 102.14. So the 102.07 to 102.23 level was going to be resistance on the top side for the dollar versus Canada. Taking a look at the old hourly chart, we had this channel in here that we were testing this top end of the channel at the 101.95. We'll see if we can break above that level, and again remember the 102.07 level to the 102.23 level on the top side. Dollar Canada definitely of a concern. May get a boost because of slower growth. If we're going to see slower growth in the United States or abroad as a result of budget issues, then we may see a rebound in the dollar Canada as the Canadian dollar gets weaker on lower oil demand. Today we have Empire Manufacturing coming at 8:30 for the U.S. Last month it was 24.9. This is regional manufacturing index, especially coming out 22 versus 24.91. We also have the net long-term tick flow data. Last month we had an inflow of 63.3 billion. That was in December. This is January's number coming expected to be 47.5. Industrial production comes in at 9:15. The expectations are 0.0 versus plus 0.9. In January, capacity utilization also comes out 72.5 versus 72.6. It still remains on the low end of capacity utilization and gives further room for growth and keeps probably employment under check. And the NAHB housing market index is supposed to come in at 17 versus 17 this week. We do have the FOMC rate decision tomorrow, which is going to be a key economic release in the U.S. and Canada. We have new motor vehicle sales coming out at Monday at 8:30. The expectations are for 0.0 versus plus 2.6. That's my morning report. Wishing everybody best of luck. Bye.